All right, guys, cool. So we're recording. I'm going to go straight through my strategy on how I do it. And here we go. All right, so here's USD JPY. This is one of my favorite pairs. It's been, I haven't really been trading it as much lately.
Yo,
What?
you know what helps?
I'll share my screen.
There's a green button, when we can
All
see
right,
your
cool.
screen, it helps.
All right, guys. You can see me now, right?
You're good. Yep,
All
you're
right, cool.
good.
So this is USD JPY. I'm going to go straight through my strategy. Boom, 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 real quick. If you guys didn't hear it at the beginning, how I set up my indicators. I'm not an indicator trader, but I use it as confirmations. I'm more of a naked trader. I look at candles. I look at price action. I drop down from the daily. Mainly what I analyze is daily to the 1 hour, and I look at my entries on the 15-minute and 5-minute time frames, okay? So I'm going to go over USD JPY really quickly. We can go over gold too. I'm not going to go over a whole bunch of stuff because my strategy is literally the same on every single thing. So right off the bat, we got ADX and DI. So indicator is right click on the screen. You're going to click insert indicator, and you're just going to type in ADX. It's going to be the ADX and DI. Okay. Basically what this does is you have bullish and bearish momentum. As you can see down here, you have this line that's the 20. If the red line is above the 20, that's bearish momentum. If the green line is over the 20, that's bullish momentum. But the power is the black line. That shows you how much power there is for those momentums. So a lot of times, it's showing you what type of trending market it is in. So if the red and the black are over top of the 20, it's in a bearish trending market. If the green and the black are over top of the 20, then it's in a bullish trending market. Okay. The other indicator that I use is RSI, and I put the setting at 5. As you can see, 5 here. My levels are 70 and 30, okay? If it's below the 30, it's oversold. That does not mean to buy, guys. This is just an indicator, okay? This is just getting your eyes peeled to, okay, we're going to maybe be looking for a little bit of a buying action. I want to see if there's more confirmations to see if I want to buy, but that does not mean to buy, okay? That's just an extra, hey, keep your eyes peeled. Now, if it's over top of the 70, that's overbought, meaning, hey, you're looking for sells if your correlation to your multiple confirmations are there, okay? Now, I look at the daily first. I zoom out a little bit, and I'm not looking at the candles right now. I'm just looking at how the market is going. I'm looking at market structure. I'm looking at price action, just kind of seeing what the market's been doing over time. As you guys can see, previously it's been making lower lows, lower highs. So it's in a downtrending market. As you can see, the ADX is red, and the black line is also over top of the 20, meaning that it's in a downtrend, meaning that it's in a bearish trending market, okay? There we go. So now what are we doing? We're on the daily. So that's just got our eyes peeled for sells. Does that mean we're only looking for sells? No, because we're on the daily. A daily candle can be hundreds of pips. Okay. So that's why I'm telling you guys, because right here, it's showing, looking for sells right here, RSI, you'd be looking for buys. That's why you don't want to just go off of indicators. But so now what we're doing, the next thing that I do is I drop down to the 4 hour, because that's kind of got my eyes peeled. I kind of see what the market's doing. Obviously, you can see lower lows, lower highs as well here. So now the next thing that I'm going to do is I'm going to draw out my trend lines. I don't use a whole lot of support and resistance because I can see it with the naked eye. Like right here, support and resistance is, basically your best friend. The only difference between trend lines is the diagonal version of support and resistance. Support and resistance is the floor and the ceiling. As you guys can see right here, I don't need to draw this line to tell me that it's bounced off here, 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 and then it broke through here. Another big key, guys, write this down. I'm telling you, this is going to make you a lot of money. This is going to save you a lot of money. This is just one key. I'm not going to teach you everything I know tonight because I will be on here for hours, but this is a couple keys that you guys are really going to just need to see. That's really going to help you and be like, oh shit, Matt said this. Okay, great. It's not a good time to get in. So first off, real quick, as you guys can see, this is support, right? Think about a bouncy ball or a basketball. You throw a ball at the floor, it's going to bounce off. You throw a ball at the ceiling, it's going to bounce off, right? So as you guys can see previously, market has came down here and touched this multiple times, right? Now what you're going to see is for support to be broken or resistance to be broken, it's going to take a big candle. And I'm going to prove it to you right now. Guarantee you every single time that you see the market, the price has broke through support or resistance, it's taken a big candle. Watch. So we'll go in the past here. All right, as you guys can see multiple times right here. Look, multiple times it's been the floor and the ceiling, right? Bounce, bounce, took a big ass candle to break through it, right? Came back up, big ass candle to break through it, right? Came here, bounce, 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 fold around with a little bit, retested, came down, look, boom, big ass candle broke through that, right? Came up here, all this stuff, this is all structure, this is all other price action, it has absolutely nothing to do with this this support and resistance line, but I'm just giving you an example. Came through, bounced, right? Came up, right here, bounced, took a big candle to break through. These aren't little candles. This is on the 4 hour, guys. So this is taking a lot of momentum to break through it. You know, think about it like this. If you threw a basketball at the ceiling, you know, which is basically drywall and 2x4s. If you take a basketball and throw it through the ceiling, it's not going to do nothing besides bounce off. But if you feel that ball through full of concrete and you shoot it out of a cannon, most likely it's going to shoot straight through that ceiling, right? It's going to take a lot of momentum. So same thing here, coming down here. You know, a lot of times when you see that there's not as big of a candle, but yeah, right here you can see this, it took a lot of pressure, a lot of momentum to break through, right? That's a big candle. A lot of times if you see, like if you go look at OddCAD right now, it literally consolidated for over 40 hours and then tanked, right? It consolidated for a long time. Now, that's the biggest reason why I don't trade Asian. I told you guys in the webinar previously that I like to trade New York mainly. Why? Because there's a lot of momentum there. A lot of people are trading New York. Not a whole lot of people trade Asian, and a lot of people that do are mostly scalpers. So they're getting in, they're getting out. That's why an Asian session during the middle of the evening, you see there ain't shit happening. It's just consolidation, just flatlining or up, down, up, down, up, down. Price pretty much stays in the same area. You're getting pissed off because you're staring at your screen all day. You decide, okay, I'm tired, I'm going to bed. You go to sleep, wake up in the morning, your account's blown. I don't want you guys to have that problem. Why? Because I've been there. Guys, I'm not going to sit here and act like I know everything. But the thing that's beneficial about myself, Alec, and a lot of the other leaders that are on this webinar is not only do we know what to do, but most importantly, we know what not to do because we've been there. We've made the mistakes. We can teach you exactly what not to do so you can capitalize on the losses that we've had so that you cannot make them yourselves. Okay, so I forgot about the Bollinger Bands indicator for the guys that weren't on the last webinar, but Bollinger Bands, these are my Bollinger Bands. I just use the standard settings, right click, add indicator, Bollinger Bands, boom. So you got the 3 indicators on there, right? Now you guys understand how, you know, I look at support and resistance. I do not mark them up because once you see them a million times over and over, you can see it like the back of your hand. It's like second nature. And if you have all these lines all over your screen, you're just going to get confused. So the next thing that I do is do the exact same thing as I just showed you, support and resistance, but I do it diagonal, which means it's a trend line. If you have both on top and one on the bottom, that's a channel, okay? That's what I love to trade is channels, okay? So basically what I'm looking for is I look at the high, the highest portion of this move, and I draw a trend line from the wicks on the top. And this is just, you know, kind of giving you a broad example. Now this is a channel, okay? They're everywhere, guys. There's literally channels everywhere. Now, this is not a huge, you know, perfect channel or anything like that. This is on the H4, but I'm just giving you an example. A channel is basically, think of a tube. If you had a tube, like a PVC pipe or something like that, and you took like a little tiny bouncy ball and you just got it to bounce, what's it going to do? It's going to bounce off here. It's going to bounce off here. Now think of if this is just a pipe laying down, it's going to bounce, right? That's exactly what's going to happen. Now what's going to happen is, let's say that tube that you have that bouncy ball in is very, very strong, okay? Let's say it bounces off here, and let's say it decides it wants to break through. Let's say this had so much power that it broke through this top portion. Does that mean I'm going to get in as a buy? Hell no. That means I'm going to wait for a retest. I don't enter until I see the retest. If you guys look at my screenshots and stuff that I post in the chat, I talk about retest constantly. So what am I waiting for? I'm waiting for it to retest. It needs to retap this area and prove that it's time to be a buy. So I wait, like I said, I wait for it to break through that channel, and I'm looking for a retest. I'm looking for it to come back down right here. So if it comes back down right here and tests this area, what am I doing? I'm dropping down to a lower time frame and looking for an engulfing. If I see an engulfing bullish, I'm going to enter, okay? And I'm going to put my stop loss here, which is about 5 to 10 pips below the candle open. So what's that mean? That means if I lose, I'm only losing a couple pips. But what's my target going to be? My target is based off of Fibonacci. This is where my take profits are. You guys have seen me post shit all the time, and people are like, take profit, dude. You're going to get it come back right up to break even, or you're going to lose. And I hold it. You know, I've been up hundreds of dollars. It's came back almost to my entry, and I still held it. And I end up banking hundreds of dollars within a couple of days because I knew I paid attention to market structure, price action, where my Fibonacci levels were. So basically what I did, okay, guys, look. So I would be looking, okay, let's say it broke through here and I saw this. Let's say it came up here. Let's act like none of this stuff has even happened, okay? So I would go from that low to that high is where I would look at. Now, if it made a reversal right here on the 38.2, I'm going to be looking to target, okay? I'm going to be looking for my target. Let me zoom out. Now, what I do is I like to have multiple Fibonacci levels correlate. So I'd be looking for, you know, negative 61 point or negative 61.8 would be my target right here. This would be my second target, okay? But another thing that I like to do as well is I would draw this here and go down to right where it reversed. And you could have a smaller take profit of the 161.8, you know, as well. You know, if you wanted to do more of a scalp, meaning the same day trading, you know, not holding, because obviously this is on the 4 hour. If I'm thinking this is going to hit 61.8, that's not going to happen in a day. That's going to happen in about a week. But I'm just giving you guys an example. And you guys can literally do this on any time frame. And then this is literally how I trade on everything. I'm going to give you guys a couple more examples. You can do this on any time frame if you want to scalp, if you want to swing, if you want to do whatever. But all I do is I'll pull out my trend lines. I'm going to give you a good example. I can see it right here with my naked eye, okay? Let's say none of this shit here has even happened, okay? Like not really, like all like this here, but like after this hasn't happened, okay? So this is what I would do. All right, so look, this is a channel inside of a channel, okay? You guys can all still hear me, right? Can someone unmute themselves and just make sure so I don't think I'm like talking to myself?
Yeah, you're good. You're good.
Cool, cool. So basically what I'm looking at is, like I said, the tube. You're looking for it to bounce off, and bounce off. If it breaks through, you're looking for what? A retest, and then you're looking for an engulfing. Perfect. You guys should be able to see this. If you can't, I'm going to point it out to you. And I want you guys, if you guys really want me to help you do this strategy, now you guys can do Alex strategy. You guys can do, you know, David's strategy. You guys can do any strategy you want that's in the back office. But if you want specifically to do my strategy, do not like message me and say, hey man, can we do one-on-one webinars until you go through and find me at least 10 of these and screenshot it and send it to me, okay? Because I want you to be able to make sure that you're understanding what I'm saying. You know, if you need to rewatch this webinar multiple times, that's completely fine as well. But basically, here's a channel, okay? I'm looking for multiple taps. As you can see, tap, tap. Think about this as if it wasn't diagonal. It's the same exact thing as support and resistance, right, guys? Okay, so tap, tap, tap. You know, I'm looking for it. Okay, cool. So what would I be looking for? So it tapped off of this area. What did it make? An engulfing, guys. Right, an engulfing. Does that mean we're looking for a buy? You could have taken that as a buy if you wanted to, and then put your take profit at the top of the channel, right? You could have done that. And then what would we have done? Based upon my strategy, what are you looking for right here? You're not looking for buys, right? Remember what I taught you earlier. You're looking for sells. However, what happened? If it came up here, does that mean you sell? Absolutely not. That does not mean you sell. We're looking for an engulfing, okay? Now what happened? Came up, went into our area, it broke through it a little bit, then made an engulfing. Honestly, I would have entered. I would have entered with an engulfing, put my stop loss right above the candle open, okay? About 5-10 pips above candle open. And what happened? I would have caught a few pips, not a whole lot. Would have been a little scalp. What, about 20 pips? 20 pips? 15 pips, I would have set a break-even stop loss. 20 pips, I would have put 5. My market came right back up. I would have closed at 5 pips. Not a big deal. 5 pips, not a big deal. That was not what we were targeting. But hey, it's still correlated to our analysis. However, what did I say? We're looking for, if it breaks through, we're looking for a retest, then an engulfing. So what happened, guys? Right here, came up, broke through our channel. So what are we looking for? Okay, our eyes are open. We're looking for a retest. We're looking for an engulfing to see if it's going to start going bullish, and we're looking for buys. Okay, cool. All right, Matt told me to wait. Once it breaks through, be patient. Don't just instantly enter a buy. We're looking for retests. So we see right here, we see multiple retests. It's just kind of fiddling around right here. It's kind of fiddling around. Like you see, it's kind of consolidating. But it's consolidating basically in a diagonal line right on our resistance, like we talked about, right? So now what are we looking for? Well, Matt told me not to enter unless I see an engulfing. Okay, cool. I'm going to listen to what he said. So what did we see? We saw an engulfing print right here. Perfect. We waited till it printed, or you could have dropped down to the 15-minute time frame, and I'm going to show you what I do too. Back testing is really key, guys. If you guys want to use my strategy or Alex strategy, some of the stuff that he just taught you, back test the shit out of it. You guys can go scroll back in time and practice it and practice it and practice it, practice it on stuff that's already happened. And then once you start to see it multiple times, then you can react to it when it happens in the live markets, okay? So what we're going to do is I'm going to go ahead and highlight this real quick, and I'm going to show you something. You could have got in a little bit earlier if you wanted to, but if you did want to wait that long, you still would have caught a nice set of pips here. Now let's go find where that blue square was. Okay, guys. So what I do is we drew the channel on the 1 hour, correct? Right. We drew the channel on the 1 hour. So I told you guys we don't enter on the same time frame as that we're marking up. We enter on the same on a lower time frame. We're looking for the 15-minute, 30-minute, 5-minute, whatever. You guys should be able to see this perfect right here, right? What did I say? It's consolidating. Matt told me not to enter until I see an engulfing. There's no engulfings, guys. There's not really any engulfings after what we said. We came down, we saw this, and then what do we see? Right there. We see a little engulfing right there. If you drop down to the 5-minute, it's going to be a bigger engulfing. So right here, Matt said to enter after the engulfing prints. Cool. Let's mark it up. See how many pips we would have caught. I'm going to show you my rule of thumb. So Matt said enter after the engulfing, set your stop loss 5 to 10 pips below the candle open. Okay? So if we lose, guys, we're losing like 15 pips. Not a big deal. Check this out. If you would have taken this exact trade, retest, broke through the channel, and look what else is there. You see that right there? See this down here? That's my Bollinger Band. Like I said, think of it like a rubber band. So we got a trend line, right? We got a Bollinger Band tap, 2 confirmations, and we got an engulfing, 3 confirmations. Buy the shit out of it. You bought right there, okay, right where we had it. Already to the first swing on a 15 is 30 pips. 30 pips on a 0.1, that's 30 bucks. On a standard, I mean, obviously I don't want you guys to try the standards, but I'm just saying, you know, if you held it to the next swing, 75, 80 pips. You guys happy with 80 pips in one day off of one trade? 0.1, that's 80 bucks. I mean, that's exactly how I do it. And a lot of times I twin trade. So what I'll do, this is my rule of thumb, guys. 15, 20 pips in profit. I set a break-even stop loss so I can't lose the trade. What I also do is I'll twin trade. I'll enter twice. I'll enter 1.1, and the next one is another 0.1. My first take profit is 30 to 50 pips, okay? So no matter what, if it goes up, I would have caught 30 to 50 pips right here. My take profit would have been hit on the first one. My other one has a break-even stop loss. That means I'm riding it out. I'm riding it out. I'm riding it out. Once it's 40 pips in profit, I set a 10-pip stop loss. 50 pips, just so on and so forth, just moving your stop loss up as I go along. Let's say I wanted to put it at maybe 40 pips stop loss. I'm up 80 pips right here, guys. I'm like, hell yeah, let's ride this thing out. I go to sleep, comes down, boom. I close it out at 40, 50 pips, guys. 40 to 50 pips just on your stop loss adjustments. On one trade in one day. That's literally it, guys. Like, I'll show you another example. Like, okay, if anybody doesn't understand this, please unmute yourself because I want to make sure we're all on the same page. So I'm going to give it like another 30 seconds for you to unmute yourself. If you don't understand it, let me know. I'm going to do like a couple more examples too. If nobody says anything, I'm just going to jump right into it. Good? Okay, you guys still on here and stuff?
I'm in training. So
Yeah, we're good.
Cool.
We're good, bro.
All right, good deal. Okay, is this all making sense? Like, is this making sense to you guys?
Yes, sir.
Cool.
yeah, it's kind of making sense to me too.
Good deal. Okay, guys. So what did we learn? We've learned that I have the only indicators that I use are ADX and DI setting, RSI 5, Bollinger Band standard settings. I start from the daily. I'm looking at market structure. I'm looking to see what kind of trending market is. I zoom out. We're seeing lower lows, lower highs. And I guarantee you this is when Fibonacci comes in. Okay? Guarantee you if I take a Fibonacci level from right here at the top, the highest high, to this low, I guarantee you this correlates to a Fibonacci level. Okay? Watch. Let me adjust this for you. Just higher. To that low. I go from the wick, okay? Remember, guys, this is on the daily. So you do not enter on the daily because one candle can be hundreds of pips. If you guys ever zoom out and it's really thin like this, just click auto and it'll bring it right back, okay? So what do we see here? What did I tell you guys? I told you it was going to be a correlation to Fibonacci. What do you see here? Alec, what is this? What is this? This is a double top, right?
Yes, sir.
Double top, perfect retest on the 70. 10.
Yeah, and look at that candle formation too on the left, double top. We have a morning star. All right. Those three, you got a bullish candle, and then a doji, and then a bearish engulfing, right?
Yep.
And on the second one, you have a pin bar, guys. A pin bar is when it wicks one way and less than half the body is filled.
Yep. So right there on the daily, guys, there's a lot of people that trade off of the daily. That's not where you really want to get your entries because you're not going to have a solid entry. You could have, 30 to 80 pip drawdown. So what Alec and I normally do, let's talk about this entry right here. Okay. I'm going to give you guys an example. So that's what I do a lot of times. So Fibonacci, I'll zoom out on the daily. I'll go from the highest high to the lowest low, and I'll break it out if it correlates to a Fibonacci zone. Let's say this, guys, okay? Let's say none of this has happened. Let's say none of this has happened. And let's say me and Alec are on a webinar like we do all the time. We're just kind of trading together. And let's say we're just at this point and we see this happen. Let's say we're right here. Let's say that this blue candle, this bullish candle, we got 10 minutes left. Okay. We got this bullish candle right here and we see, okay, it's coming up to our 70 level right now. It's coming up to our 70 level. We're going to be looking for a double top. This is what this looks like. And we're going to be looking for a point to enter for a sell. So what we're going to do, I'm going to highlight this area so we can go back in time and check it out. Highlight this area. Remember, guys, we're on the daily, okay? This is just showing us. Remember, none of this stuff has happened, okay? None of this stuff has happened. So now I'm going to drop down to the 4-hour. And I'm going to go back to that area, and we're going to see what's going on. We're going to see what we're looking at here. Okay, so remember, it's on our 70 level of the Fibonacci. As you can see, there's a ton of consolidation. But on the bigger time frame, this was our first part of the M. This is the second part of our M on the double top. So where we would have been at that point in time is right here. Alec, what is this? You still on here? Okay, somebody else.
Have somebody else.
Ivy, somebody else. Erica, anybody. What is this formation right here? Anybody?
I just said it.
He just said it.
Head and shoulders. I don't know.
Nope, not head and
It's
shoulders.
a good guess.
Good guess, though. Okay, so this is an evening star here, okay? So you have a bullish candle, you have a doji, then an engulfing. What is this big portion here? Alec just said it. What is this big thing? What was it on the daily? We had a big M, part of the M, another part of the M. This is just a smaller version of that bigger thing we just saw. This is another double top, okay? So you got another, okay, so we saw a double top. We saw it double tap our 70 on the fib on the daily. What did it do here? It double tapped our 70 again, made a reversal candle, and another double top. What's right here, guys? This is our Bollinger Band. We got 3 confirmations, 4 confirmations right there, okay? We waited till we saw another engulfing or another evening star. We see. What Matt say? Matt said to enter after that. If you would have entered right here, we could have done our thing we talked about a little bit ago, okay? 1 entry, 2 entries. Point ones, first swing, 250 pips. You guys cool with that? You guys think 250 pips would be cool on one trade? 2.1s, that's $500. Would you guys be happy with $500 on one trade?
Yes, sir.
Right there. Now, a lot of times what happens, this has happened to me a million times. I get a perfect entry just like that. I'm up 200 pips, and look what happened. Came right back to my entry. Stop getting greedy. Have a trading plan. Think about how many pips you're wanting to catch, or adjust your stop loss. If you're 50 pips in profit, set half of it as a stop loss. So no matter what, you make 25. If you're 100 pips in profit, put it at 50 or 75 or wherever you want to put it. So no matter what, if the market reverses, you don't have to worry about it coming right back to your entry and you're losing all your profit. So basically what I would have done is I would have had 2 entries, close one at 50 pips, let the other one ride out. I probably would have, this was at 250 pips. I probably would have had it at like maybe 200. Went to bed, came up, I closed out $200. That's $200 on one trade. Like, is that worth it? And then what we would have done again is we saw, okay, this made a reversal. I think this is going to reverse. So maybe we got out here. We would have saw the bullish momentum. What are we looking for again, guys? We're looking for another reversal. What is this? Somebody tell me what this candle is right here. We've talked about it at least 50 times since I've done this webinar today. What is that? Somebody, not other than Alec. What is this candle? You guys better not be sleeping out there.
Come on, one of the easiest ones, one of the easiest patterns.
Engulfing, right?
Boom.
Yes, sir.
So what did I say? I said enter after the engulfing print. So we would have put our entry right here, our stop loss above it. Guess what? Never came back up. Our stop loss wouldn't have got hit. What happened? We put in 2 entries, wrote it out. Let's see how many pips this is. 173. You guys cool with 173 pips on one pair? 2 entries, that's $400 almost. Simple as that, guys. I mean, and look, you have multiple confirmations again, okay? You pull out your fibs. High. Oh, wrong one, sorry. Let me pull that. Wrong high. Okay, so we were right here, right? To the wick. Came up, let's zoom in. Came up, 78.6. Perfect tap engulfing. 2 confirmations right there. 2 confirmations. Let's look at our crosshair, look down. Right here, as you guys can see, it's overbought, right? 3 confirmations. Let's look here. ADX is crossed. Red started going over the 20. 4 confirmations. Sell that B, stop loss 5 to 10 pips above that engulfing. Never came up there. Your stop loss never got hit. Your 15 pips in profit, set a break-even stop loss. Adjust your stop loss as you go along. Boom. There you go. You guys just made more in a couple days on the. If you would have taken 2 of these trades, you would have made more in 2 days than pretty much anybody I know makes an entire week at their job. So it's just kind of how you guys think about it, guys. If my stop loss would have got hit right there, guys, it's going to happen sometimes. You guys are going to enter on the engulfing. Sometimes it comes up. It's your stop loss. Who gives a shit? Look at another pair. Go to gold. Look at gold. You know what I mean? So I think we got like 3 minutes. Yeah, 4 minutes left on this. So what I'm going to do is I literally just went over the same thing about 3, 4, 5 different times. I hope that made sense to you guys. I hope that really helped you guys out. What I'm going to do is I'm going to kind of just leave it open for the next 3, 4, 5 minutes. If you guys have any questions, if anything didn't make sense to you, if you want me to do another example, if you want Alec to do another example, go ahead and let us know and we'll do that. But the floor is yours. Don't just leave it silent, because nothing drives me more insane than when I do a webinar for an hour and then someone asks me 50 questions as soon as we get off. You know what I mean? Like, we're all here.
You're doing a great job, bro. Keep going.
Hey, appreciate it. Who is that?
This is Jay.
Hey, what's up, buddy? Appreciate that.
How you been, buddy? I appreciate everything you do and taking your time. Definitely learning a lot of things, and I hope everybody does too.
Absolutely, man. I definitely appreciate the kind words. I want to get to the point to where we're all on the same level and you guys are able to teach this for the team. This isn't something that, I want to do by myself. This is something like I want to be able to travel the world with you guys. I want you guys to be able to change lives as much as possible. So literally every single thing I ever learn, I'm going to teach you. You guys have that guaranteed. So like I said, anybody has anything else they want to say, feel free. If you guys want to teach anything over the next 2 minutes, feel free to do that as well. What the heck? Hi. How did you do that? Nice. Who drew that? Alec? Does anybody have any questions?
Anybody have any questions before I come in real quick? Please ask away. Please ask away if you guys have questions. No such thing as dumb question, right? The only dumb question is one never asked.
If I have a question, I'm gonna call you.
Hey, true that, Aaron. I hear you, brother. So, guys, like everything Matt just went over at the beginning, before we were recording, I went over a little bit of my strategy and kind of what I see. But here's the thing, like these are our sets of eyes, right? So you have to learn to tune your own eyes to the charts, and you may tune your eyes differently. One of my first mentors with trading, what he taught me was basically when you sit down and you look at the chart, literally try and put yourself into the chart. Like look as if the candles are all around you and you're seeing them. Oh, you got a higher high here on my left. And then, right directly above me, you have a higher high. And then, a higher low to my right. And then further right, you got another higher high right next to me. Like physically put yourself in there. And that's the thing, what I see may be different than what you see. Trading is very subjective. That's why the market moves how it does, right? The market moves because of people like us, everyday people like us, big banks, how big banks trade, what big banks see. Obviously they have a lot more control over the market. That's why the market moves, guys, is because what I see as high or low may be different than what you see as high or low. And that's what creates the volatility in the market, right? So I don't know if a lot of you guys knew that or not, but the market all moves basically if the market's trending down, right? If the market's going down, it's because there's more sellers, right? There's more sellers than there are buyers. The market's moving up, that means there's more buyers than there are sellers. So you guys have to kind of shape your own eye to see it how you see it. So if you guys want to take Matt's strategy, my strategy, David, you know, if you just want to do support and resistance, I know Ivy, you love support and resistance, things like that, you know, point line structure, guys, there is seriously thousands of strategies out there. My biggest suggestion, because this was my mistake, I would lose a trade with one strategy and skip to another strategy. My biggest suggestion, pick a strategy and seriously stick to it until you become consistent. Okay. $10,000. I went over this on our last webinar. $10,000 become perfect at,